Tesla stock is up another 5% after Elon just pulled a checkmate move on the whole industry, partnering with Ford and GM to where Tesla's basically not going to have any competition. And this is going to lead to revenue increases in the billions of dollars per year starting next year. Now, this is a positive for the long term, but here in the short term, you're getting price targets that are being raised today. And I pointed this out in the last video. You're going to have to see this. When the average analyst price target was $189 and Tesla is trading in the $245 range, analysts are going to have to follow suit. And that's going to be another bullish catalyst for Tesla stock. You're getting your first major price target increase from Dan Ives, and he slaps a $300 price target on Tesla stock. That is over 40% upside from Tesla's current levels. But even on top of that, in the short term, I think you should know that short sellers are down over $10 billion in their short positions. And the dollar amount currently sold short in Tesla stock is $23.5 billion. This is the highest, by far, level of shorts that you have seen in Tesla in the last year. You remember when Tesla was falling down to $100 in January? Well, you are way more short now than you were then. And this bet is obviously going against the short sellers. So I think you could be in for an even larger rally. Now, we also must go over some of the negatives that could happen for Tesla, for the broad markets over the next couple of months here. And really, that's where I want to start this video off with, because there's so many bullish things you can say and things that we're going to look at here in this video. You also have to acknowledge the bearish side of this. And I'll tell you right now, the EV, the auto sector, specifically is very sensitive to interest rates. We know this. Now, what the markets have recently priced in as far as Fed policy is a pause at the next meeting, which is June 14th. That's going to be next week. Keep in mind the CPI report comes out Tuesday of next week. So if CPI is hotter than expected, you're going to get a rate hike. If it's comes in line with expectations, if it comes in softer than expectations, you're going to get a pause. But wait, you're expecting a rate hike at the next meeting, July 26th. And then you're expecting a pause in September. And then markets are pricing in a rate cut November 1st, 2023. And then you're expecting a pause in December. And then you're expecting another rate hike in January 2024. Or another rate cut, in 2024. So Fed policy is really all over the place right now. You're caught between economy slowing down and inflation staying too high. So we really don't have clarity. And that's one of the risks that I would say to this market. If on one hand you do get massive rate cuts, that's going to be good. That's going to spur demand for lending, but it's going to say, hey, the economy's not in such a great place. So actually slow and steady rate cuts, probably the best outcome for Tesla when you factor all things considered. Now, you're also getting a pretty dire warning from the head of bonds at JP Morgan. Bob Mitchell says he sees worrying signs of 2008 in this market, and the parallels are quite similar. He says this is really like the period between March and June of 2008 when JP Morgan came out and bought Bear Stearns, and people thought things were fine and the market started to rally back. Crisis was averted. And then later in the year, September 15th, Lehman Brothers went down the toilets and all hell broke loose in the economy. Now, he goes on to say that due to a nearly 15-year period of cheap money and low interest rates, around the world has vexed investors and market observers. Top Wall Street executives like Mitchell's boss Jamie Dimon have raised concerns about the economy for more than a year. And it goes on to say that this is the calm before the storm. For Mitchell, who began his career more than 4 decades ago, the signs are clear. The next few months are merely a calm before the storm. Mitchell oversees more than $700 billion in assets for JP Morgan and is also the global head of fixed income for the bank's asset management arm. And he talks about the fact that typically after the Fed stops raising rates, there's 13 months before the recession, before you start to actually see pain in the economy. And it says that once the Fed has finished raising rates, quote, you're not in a recession. It looks like a soft landing because the economy is still growing. But it would be a miracle if this ended without a recession. And then he says, I'm highly confident that we're going to be in a recession a year from now. I will go ahead and link this down below in the description of this video. I highly recommend you guys read this whole article because it goes into a lot of detail that we just really don't have time to get into here in this video, because I want to talk about the bullish, because this is more longer term dated out. You're probably going to be bullish for a while with Tesla, and the reasons are clear, right? Twitter now has a new CEO. Elon's focused on Tesla. Tesla is killing it everywhere they're in business, especially in China. They're just crushing all the competition. Tesla just cornered the EV market. I mean, there is a lot of catalysts recently that have been very bullish for Tesla. And this, I want to start with the price targets, guys. So this ultimately was going to lead to price targets getting raised with Tesla. And while you haven't seen analysts rush into raising their price targets, you just got the first one. So Dan Ives from Wedbush, very popular guy, has some very high price targets for a lot of names. Tends to be a little bit more conservative with Tesla, even though he's a massive Tesla bull. He raised his price target from $215 to $300 per share. That is upside of over 40% from current levels. And if you look at the average analyst price target, it's sitting at $191.59 with a return potential of negative 18.5%. Obviously, you're going to have to see more price targets that get raised. With this most recent price target increase, Dan Ives says in a nutshell, Musk and Tesla are playing chess while other automakers are playing checkers in this broader EV green tidal wave. He wrote, we are also adding Tesla to the Wedbush best ideas list this morning as the street starts to better recognize the underlying value in the Tesla EV ecosystem into 2024 and beyond. He also goes on to say that, quote, Tesla is in a massive position of strength after building its EV castle and is now set to further monetize its success, pointing that the company's increased ability to bring in revenue outside of EV sales. The Elon Musk-led firm should net another $3 billion in new revenue from Ford and General Motors EV users, I've estimated. Since Tesla and Ford were the first ones to partner on EV charging to make EV charging available for Ford EV owners, Tesla's stock has added $205 billion in value since the end of May. It's only been about 2 weeks. And short sellers, they're feeling the burn right about now. And how could you not, given what's happened recently? The dollar amount that's currently sold short in Tesla stock is going up like $1 billion a day. It's insane. Shorts are losing their asses on their short positions. I think that could be an understatement here. 3 months ago, you had $15 billion in short positions on Tesla. Today, $23.5 billion. And the short interest really hasn't moved around a lot. The official short interest reports from about 3 months ago, you were still at about 3.25% short. Now you're 3.51% short. So shorts have increased a little bit, but they haven't covered. They haven't even started to cover on their short positions. And there is 100 million shares currently sold short in Tesla, and $23.5 billion is nothing to sneeze at here. That's a huge amount that is sold short. And I think that means Tesla stock needs to go much higher from here, whether you like it or not. Tesla should have never been down in the $100 range. The fears were overblown. So when you consider where Tesla really should have been at this whole time, even in relation to stocks such as Apple or Microsoft or other names that have held up much well, Tesla really should have only been in the low 200s to begin with, not 100. So this rally isn't as strong as it looks like, because fundamentally the stock was just oversold at those $100 price levels. So I think that means more upside from here. Now, if we look at some of the option activity here today with Tesla, you have seen 194 interesting options placed by hedge funds and institutions today. These 194 orders total $66.39 million with a positive order value of 67%. And you're starting to get some pretty bullish orders coming in. One of them I can see right now worth $300,000 is an October 20th 270 call, a October 20th $300 call, and other ones such as the 290 calls, more 290 calls, more $300 calls, prices that are much higher than where Tesla is currently at. So people are making their bullish bets. And I do ultimately think once shorts do cover on those short positions, you're going well over $300. You're going to probably hit around 350. I expected 250 relatively soon. I expected 300 relatively soon, before some of these positive developments that we have seen recently. So we're going to go ahead and go to the charts and just see where things look. Okay. But I do want to acknowledge some of the short-term negatives, potentially for Tesla specifically, which I really don't see as an outcome here, but they are possibilities. And a lot of people wanted to hear about them. Number one, it's going to be earnings. But as we know, Tesla does give us the quarterly vehicle deliveries before earnings. So if those come in lighter than expectations, which there's no indication that's going to happen, what we've seen out of China has been very encouraging. Tesla has raised prices recently, which is also very encouraging, a good sign that Tesla's seeing good current demand. That would be a potential negative catalyst that could happen for Tesla, but it just doesn't seem likely. So really, there's not a whole lot of negative that specifically I can see coming for Tesla, unless those delivery numbers are bad, in which there's no indication of that. So I don't really think there's much to stop this rally anytime soon. And if we go ahead and take a look at the charts with Tesla, Tesla is still down after today's move about 69% from its all-time high. You'll have to rally a lot to get back to that $415 all-time high. Now, a $300 or $315 Tesla share price would be a 28% rally from here. A $350 price for Tesla stock would be a rally of about 42% from here. And I think that is very likely based off of when shorts start to actually cover on some of those short positions. But here in the kind of near term, you are overbought on the RSI. This has been the longest winning streak for Tesla in a very long time. It is the 11th straight green day in a row. And a lot of these green days have been 5%, 3%. Very strong days, not just small green days. They've been very large. So from here to see Tesla really trade in the 240s to 230 range for a couple days would not surprise me. But as long as Tesla stays above this downtrending level of resistance that we've previously broken out above, and this was a trend since November of 2021, so it's almost been 2 years now. As long as you stay above that, which is going to be around 220 for Tesla, the upside is going to be coming. Now, the moving averages are also going to start to tilt upwards, which will give you more support for Tesla if a downside move does start to come. But like I said, the RSI is at 86. Overbought is 70 or higher. So I do expect a sideways consolidation kind of move Probably next week. That would not surprise me, as we have Fed Jerome Powell, as we have inflation data, and more Fed speakers, things of that sort next week. And we'll break down the whole next week's game plan in the next video. So stay tuned for that. Hit the like button and subscribe to the channel. Where do you think Tesla stock is going to go? Where is your price target? I'm going to put mine in between 300 and 350. Most certainly 350 towards the end of this year, largely fueled by positives in Tesla's actual business, and we've seen those positives playing a role. Price targets being increased and short sellers covering on some of those short positions. Ladies and gentlemen, that is going to do it here in this video. Hit that like button and subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.